proposal for a cap on Russian oil, because in parallel to these conversations here at the G20, there's that call among the G7 ministers, and we're expecting some movement on that front. Tell us what that could mean for oil prices going forward, because Russia has already said that it will not sell oil to countries that go ahead and implement a cap on their price of oil.
I think you raised all the most salient points. So it is the oil-consuming countries and to some extent also the oil-exporting country, because the United States is one of them that would like to impose a price cap. It remains to be seen if all the oil-importing countries, and China is the largest one, are going to abide. They may decide that for geopolitical reasons they do not want to abide by rules set by the West. If that occurs, then the price cap would most likely fail. Another actor that must be taken into consideration is obviously Russia. Russia may decide that they will not sell their oil at a price cap. We also need to see what the price cap is. Is it $50 per barrel? Is it half the price of Brent? So these are details that are obviously, the devil is in detail. But let's make a scenario in which Russia decides that they're not going to sell at the price cap. So if we're talking about something like 10% of their export, the current exports, this is something that probably the market can digest because there is enough supply in this case to keep the market balanced. But if we're talking about something like 50% of their export, currently Russia exports something like 6 to 7 million barrels a day of oil, crude and oil products, then we're talking about a major supply disruption. And this would result in significantly higher prices than we see today.